We keep talking about this peace dividend perhaps being a tailwind for European stocks, and already a moment where that has been fairly positive for this part of the region. How long does it last?
I think there's two parts here. I think the peace dividend one I'm a little bit worried about because it's not going to happen quickly. I think the idea of the fiscal spend that I think that you guys were discussing there is perhaps the more sustainable one. That's the one that's not been priced there. I think people have already priced in the idea that we might get resolution in Ukraine at some point this year. So that bit's probably already fully priced or excessively priced. But the idea that suddenly Europe takes off the fiscal handbrake, starts spending aggressively because defence spending counts as outside the budget limits, might be a real game changer for the continent. And that might provide a more sustainable tailwind for stocks and for the currency as well.
Mark, when you look at the Chinese space and the upside that's continuing to come through for tech stocks there, how sustainable do you think that is? The blessing of Xi Jinping for companies like Alibaba, is there more money to be put to work in Chinese tech stocks?
Very much so. The world is massively underexposed to the kind of changing narrative there in China, Hong Kong. On a very short-term basis, it does look like Hong Kong stocks, which you know are my preferred way of kind of expressing this, are looking probably a little bit stretched, especially with a lot of earnings this week. So we may get some consolidation for the next couple of weeks. But overall, these are very, very cheap stock markets, and they're discounted for false premises. They're discounted because the idea that the benefits of the AI productivity boom would only accrue to US software firms. Well, that is not the case. This will be a global productivity boom, and it'll benefit Chinese firms that are very, very strong in this software space as well. So I think that suddenly the discount that we're seeing in that sector is being removed. And at the same time, TINA, the idea that there's no alternative to US megacap tech stocks, is being undermined because of policy uncertainty around the new US administration, what they're going to do on tariffs, and that is undermining US businesses. So suddenly people are looking for another home outside the US, and Hong Kong will continue to be a sustainable beneficiary of that.
Just finally, Mark, if we're looking for a bull case for the euro, do we find it in the peace dividend? Do we find it in the German election?
I don't know if we find it necessarily in the German election, apart from maybe relief that we're not getting the worst case scenario right now. But I do think that, we're changing the narrative, that there might be a slightly more positive story in Europe. This is not a super bullish story. It's that we've been deeply pessimistic. The idea that European growth remains very negative. It's struck down by bureaucracy. But now we might get some spending, and we also might get the peace dividend as well. At the same time, the dollar is very overpriced, and suddenly some of the exorbitant privilege of the dollar are going to be eroded at the margin. It's not disappearing, it's staying the world's reserve currency, but all the reasons people are wrong the dollar are starting to be undermined. So I think this is a year where the dollar suffers and the euro will benefit as a result.